our next speaker is Charles Stewert. He is the CEO of Itaú BBA International. It's the European platform of the Corporate and Investment Bank. So welcome, Charles.
Great, thank you very much. Always hard to speak immediately after lunch. If anyone needs a café, cafecito, cafezinho, feel free. So good afternoon. I'm Charles Stewert, and I'm the CEO of Itaú BBA International. Itaú BBA International is a UK wholesale bank. We're a subsidiary of Itaú Unibanco, which I suspect many of you are familiar with, the largest private sector bank in Latin America. At Itaú, we call ourselves the global Latin American bank because everything we do in some way relates to Latin America. Here in the UK, we opened our bank only 3 years ago. So we have a 25-year presence in Europe, but we've refocused our activities here in the UK and have been growing and focusing, as I said, exclusively on Latin America, trying to encourage multinational companies, individuals, institutional investors to invest in the region. So it's a pleasure to be here today, and I'd like to thank the organizers for inviting me. I should note that the last time I spoke at a business school event was a few years ago, and I was asked to discuss the evolution of the global capital markets. At about an hour before the event, I got a call from the organizer, the student who was organizing it, to confirm the logistics, and he added how much they were looking forward to hearing my remarks about the evolution of the capital markets in Japan. And so that was an interesting discussion. Hopefully today I'll be at least somewhat more knowledgeable and prepared to talk about Latin America. Just to confirm, we are here to talk about Latin America, not Japan or anywhere else. So economic development in Latin America, challenges for the next decade. Somehow one day seems horribly inadequate to discuss challenges for the next decade in Latin America, let alone half an hour to 45 minutes. You know, and to develop it fully, I mean, maybe over the course of the day we will get a broader sense, but the bottlenecks and challenges are so broad and all-encompassing that we could spend the whole day talking about challenges in education, infrastructure, productivity, politics and government policy, legal and tax reform potential, just to name a few areas. But since we're here in London talking about Latin America, I thought it would be interesting to talk about the role of foreign capital in Latin America in closing the gap between Latin America and more developed markets, and in terms of addressing challenges over the next decade. I spend a lot of my time talking to foreign investors, companies, individuals, organizations about the region, and it's always a very interesting and colorful dialogue, especially these days. And today I want to make 3 points. The first is that when you look at the data, foreign capital is actually particularly important to address capital shortages in Latin America. And that's true both from a pure quantum of capital standpoint, but also from a productivity and development perspective. And I'll give you some examples of what I'm talking about. Second, and this is something that's particularly true today, is that foreign capital tends to flow into the region at almost the wrong time, at least from the perspective of from the standpoint of returns, of financial returns to foreign investors. And we can all think back to the famous cover of The Economist, Brazil takes off in 2010. And anyone who was focusing on the region or living in the region then will recall that it was very difficult to have a conversation where people could talk about what might go wrong in Brazil. There was so much enthusiasm, the currency was very strong, multiples were high, companies were flying, foreign investors were flocking in. And today I feel that we almost have almost the exact opposite situation. And the truth, of course, is that Brazil probably wasn't as well positioned as people thought back then, and it's probably not as badly positioned as people think it is today. But describing that and getting foreign investors comfortable with investing in the region is always a challenge, and the data suggests that the capital comes in at the wrong times. And the third point is, and to sort of build on that comment, is that I do see a significant opportunity today for foreign capital to invest in Latin America, partly because of what we see going on in Latin America, the weaker currencies, lower multiples, more willing sellers of assets or securities. And long-term growth forecasts that are very still very compelling, pretty much throughout the region. But you juxtapose that with what's going on, let's say in Europe in particular, where the long-term growth forecast is very, very low and practically non-existent. Interest rates are at record lows, and if not negative in certain scenarios. And the combination of those two factors, I think, creates a very special and probably somewhat unique entry point for foreign investors who are interested in the region and considering investing. So for those who are sterling or euro or dollar investors and who have done their due diligence and have the required levels of conviction and perhaps courage, I think that this year and next year, will prove to be very interesting entry points for those investors. Of course, there's a very long history of European investment in Latin America. Anyone who studied UK history, it's quite fascinating looking at the period from the late 19th century through to the beginning of the First World War, where somewhere between 4 and 8% of UK GDP, or what is today the UK GDP of that region, was being exported in the form of capital investment outside the country. In 1913, 100 years ago, the stock of capital invested in the UK, by the UK in Latin America, equated to about 17% of UK GDP at the time. Pretty interesting. Now that's cumulative capital stock. I don't mean in that year the UK invested 17% of GDP in Latin America, but capital stock invested in Latin America from the UK equated to 17% of UK GDP. Argentina, as many people will know, was by far the largest recipient of that. That corresponded to about 8% of that GDP. Brazil was second at about 4%, Mexico 2.5%, and Chile 1.5%. First of all, I think that by today's standards, it's conceivable that we've actually gone somewhat backwards in terms of foreign investment and interest in investing in Latin America. But at the same time, it's certainly not a new concept. And much of that capital stock that was invested back then, 100 years ago, those investments are still in place today. Companies have built on them. And again, as I talk to companies, many of them have been invested in South America and Latin America for over 100 years, and they're very comfortable with the ups and downs. So why is foreign capital so important to Latin America? I want to just try to frame this the right way. The first point is, and I don't think it's a surprise to anyone in this room, is that Latin American growth is simply too low right now relative to its potential, relative to trying to address the challenges for the next decade. Growth is simply too low. By our projections, world GDP growth as well as US GDP growth should be about 3% this year. And of the principal Latin American economies, only Colombia and Peru will grow faster than that. Mexico about in line. Chile, Brazil, and Argentina all well behind those levels. In fact, we look at the European area, the EU and Japan both grew faster than Brazil in 2014. And we expect that again even more dramatically in 2015. It's hard to be a high-growth emerging economy, emerging region when your growth levels are meaningfully behind the U.S. and in some cases Europe or Japan. So in order to accelerate growth, the region clearly needs a lot of things, but one of the key components that it needs is investment, both from the government and also from the private sector. In many, if not most industries, there are examples of Latin American indicators suggest pretty significant underpenetration in that industry relative to developed economies, certainly the US and the UK. And that's really why we all see so much growth opportunity in Latin America today, because it's the underdevelopment is pretty stark in many, if not most, industries. But as we analyze where that capital is going to come from, it's important to observe that Latin America is capital short and really needs foreign capital in order to meet those needs. If you look at capital stock on a per capita basis, I would say that most Latin countries have capital stock per capita of about 1/4 the levels of the US or the UK. Of course, those countries have been industrialized for over 100 years, and the Latin countries are in relatively earlier stages of that development. But like many developing economies, the result of that is that Latin America is playing catch up in terms of trying to source and invest this capital. So playing catch up on developing your capital stock is pretty difficult when your savings rates in your economies are very low, and also when your investment rates as a percentage of GDP are very low. And to give you a couple of examples of what I mean by that, in Brazil, gross national savings rate, percentage of GDP is about 15%. You can compare that to countries like India and Indonesia, which are at about 30%. China, famous savers that they are, 50%. Investment rates, the percentage of GDP, Brazil today is about 18%. Chile, Mexico in the low 20s. Colombia is probably the country in the region that has made the biggest push to in its investment spending, its investment programs, 25% of GDP. But still, that pales in comparison to India at 31%, Indonesia 35%, China 49% of GDP. So when you're playing catch up in terms of trying to grow your capital, you can't rely on your own domestic sources for that capital, and as a consequence, you're much more reliant on foreign capital. So when we look at FDI data in Latin America, as a percentage of total investment, Chile is particularly high. 31% of Chilean investment is foreign direct investment, comes from outside. Brazil, Mexico, Peru, Colombia are all in the 15 to 20% range. And again, if you look at other developing economies, those percentages are much lower. Turkey and Indonesia are under, and India are all less than 10%. For example. So foreign capital, my point is, there's a lot of statistics I've just thrown at you, but the point is that in order to meet all of the investment requirements in these countries, foreign capital is a particularly important component. To give you two, perhaps more specific examples, themes that we probably hear over and over, and I suspect you've heard a lot about today, are the categories of infrastructure and education. In my mind, those are two of the most important bottlenecks in Latin America to unlocking growth. And when you look at the investment needs, they are pretty staggering. If we were to look at just a simple measure of roads per square kilometer of land, Chile, Peru, Argentina, it's about 10 kilometers of roads per square kilometer. Brazil, Colombia, and Mexico are closer to 20. China's at 43, Turkey 47, India 143. So of course this has to do with the population density as well, and the size of the land mass of the countries. But it's pretty the potential for development in a simple area like roads is pretty enormous. When you look at transportation investment plans, you just add up all of the spending that countries around the region have announced, perhaps aspirationally, that they would like to invest. And when I say transportation, I mean categories like roads, railways, ports, airports, We all have probably our favorite Latin American airport story. We could probably go around the room and talk about upgrade needs at various airports. But in Brazil, those plans over the next 5 years equate to, just in those categories, equate to about $80 billion of investment need. In Mexico, 55. The Andean region, Peru, Colombia, Chile, about 60 billion. That's $200 billion of investment that needs to be sourced, and that's just in these 5 countries and in these 4 categories. If you add sectors like power, energy, mining, let alone other sectors, the numbers multiply dramatically, and a lot of that capital evidently will have to come from abroad. In education, again, I think people are reasonably familiar with the underpenetration of education in the region. I was looking at some of the OECD data over the last few days as I was preparing for this, and I was surprised actually at a percentage of 25 to 34-year-olds who have achieved tertiary post-secondary education in Latin American countries. At Brazil today, that percentage is about 13%. Mexico, 23%. Chile, unsurprisingly perhaps the highest at 41%. That compares to 43% in the US, 43% and 47% here in the UK. But education is interesting not just because there's enormous need and it's a critical component of developing regional development, but also because it's a sector where I think that foreign capital, private capital, has played a particularly important role. People are probably familiar with this, but today Brazil has one of, if not the largest, for-profit education sectors in the world. Foreign capital has put in nearly 10 billion reais in IPOs and equity offerings. That's institutional money coming into the education sector. Another north of a billion reais of foreign capital invested in education-related private equity investments. And so I think that's a good example of where foreign capital has not only helped deliver on the investment spending, but also creating new, innovative, and productive channels to deliver education, which I think has been to the benefit of the country as they try to make progress on this challenge. The second point that I made in my opening remarks are that the foreign capital does tend to flow at the wrong time. And it's pretty interesting. You can look at, if you were to look at the correlation between foreign direct investment and, pick an indicator, stock exchange levels or FX, there's almost a perfect inverse correlation. Between the second quarter of 2007 and the second quarter of 2012, in Brazil, the real was largely below 2 to 1. Inflows in that period were $423 billion at an average FX of 1.83. If you look at the current real FX, we're about 2.8, 2.9 as we're here today. That's about a 35% valuation, 35% devaluation. So, if there was no hedging, that would suggest that $150 billion in investment value has been wiped off the face of that investment. And, conversely, when you look at when the real was weakest in the early 2000s, when it was well above 3 in the 01, 02 timeframe, that's clearly when the real was at its lowest. I do want to make a couple of comments, though, on the M&A and capital markets, because those are dynamics, because those are two areas that I think are good indicators of appetite for foreign investment. And I would say that despite all of the cyclical issues, there actually has been a lot of activity in the Latin American M&A space. There was approximately $100 billion of M&A transactions in 2014 involving Latin America, 285 transactions, I should note. I can't help but make the commercial that Itaú was the leader in M&A advisory in 2014. We worked on 72 M&A transactions just last year. And what we're seeing in those situations is that actually foreign investors, notwithstanding the cyclical issues and all of the noise, that there is always very strong interest in high-quality assets in the region. There's a real scarcity value associated with them. Just last year, we saw European multinationals such as Telefónica, Carrefour, Michelin, ING, Repsol, Santander, all undertake pretty sizable transactions involving their assets in the region. I think we'll see more of that this year. In fact, just earlier this week, a large UK corporate, British American Tobacco, announced that it's considering to take its publicly traded subsidiary in Brazil private. If they do that, it would be a multi-billion real investment on their part. Also, in the capital markets, the number of listed companies in the region is still very low. There's an enormous amount of potential there, and that's a place where foreign capital will play a key role. In Brazil, there's about 350 listed companies today. Mexico, about 130. That compares to Australia with 2,000 listed companies. UK at 2,200 listed companies. US and Canada each have about 4,000 listed companies. There are literally tens of thousands of small and medium privately held enterprises in Latin America, many of which are growing their top lines at double-digit percentages, even in today's very challenging environment. That to me represents an enormous cause for optimism and opportunity in Latin America. Historically, the majority of the IPOs that are sold out of Latin America are sold into the US and Europe. Up to 75% of the capital that is raised in IPOs has historically come from the US and Europe. So yet another place where foreign capital will play a key role. I'm gonna close because I want to have a few minutes for questions as well. But I've talked about one of the things that I see when I go around and talk to people in Latin America is there's a lot of very, very negative sentiment right now, and it's easy to be negative. The press, I think, plays into it as well. And of course there are very real issues that need to be addressed. But at the same time, when you compare it to Europe, I think that actually Europeans are sometimes less concerned with the issues in Latin America than some people are locally. Because European multinationals have record high levels of cash on their balance sheets, all-time high levels of cash. They can borrow, and on top of that, they can borrow money for free, if not negative. And on top of that, I wouldn't say Europe is exactly free from political uncertainty itself. So, the parallels are probably quite interesting from that standpoint also. Last week, Germany issued a zero-coupon 5-year bond at a negative interest rate. I mean, that's pretty astonishing when you think about it. Italy's 10-year bonds are trading below 2% since the beginning of this year. That suggests not a lot of optimism about the future in terms of inflation and growth in Europe, and that capital has to go somewhere. I think that even when compared to the US, that the Europeans have a greater history and perhaps even cultural affinity of investing in Latin America. If I'm not mistaken, about a third of the 500 largest companies in Brazil are actually subsidiaries of European multinationals, which suggests how important Europe is in that context. I want to make a couple of points about the potential for Chinese investment in Latin America. That's a topic that gets a lot of press. On the negative side, growth is slowing in China, as people know. The current account surplus will diminish in GDP terms, which means perhaps less money to invest abroad. And on top of it, the Chinese are certainly focused on their domestic agenda, stimulating consumption and also their anti-corruption initiatives right now. However, China, the numbers are big. Chinese outward foreign direct investment has been rising really exponentially. It was about $500 million in 2005, $8 billion in 2010, and in 2014-15, we think it'll be above $50 billion. So, those flows are enormous. To me, I travel to China pretty regularly to talk about Latin America. It feels that it's still very, very early in the relationship, but one where there's a lot of interest on both sides to develop. But because of distance, because of politics, because of just the nature of long-term investing, I think that will play out over a long time period. But that is certainly a key trend that I think we're going to see develop. There have been a few notable and sizable investments from China into Latin America, mostly in the oil and gas categories and mining categories. But to me, it still feels like it's very, very early days. So I've stayed away from talking about a lot of the headline issues in the region right now, partly because I think that there are others who are probably more qualified than I am to analyze them, partly because I think that it's very easy and tempting to succumb to short-term thinking in Latin America right now and lose track of the larger picture and opportunity. That opportunity, I think, is the reason that forums like this one exist, and the reason why we all focus on Latin America in our professional, personal lives. I am struck by how 4 or 5 years ago nobody could talk about what could go wrong in Latin America, and today nobody can talk about what might go right. My hope for 2015 and 2016 is that the key holders of international capital, whether those are corporations, whether they're governments, sovereign wealth funds, institutions, or even individuals, don't turn their back on the region, despite the many and obvious issues. I think those that do invest and invest wisely will be handsomely rewarded, as we're possibly in one of the best entry points certainly in the last decade, if not longer, for foreign investors in Latin America. And in so doing, of course, they'll help Latin America develop infrastructure, manufacturing, service industries, which in my view is one of the absolute mission-critical keys to unlocking the region's undoubtable potential. So I'll stop there. Thank you very much, and I'm happy to take any questions in the remaining few minutes if anyone has anything to ask. Please.
Thank you for your comments and congratulations on what you have achieved with your bank during these years. You mentioned, I got quite interested in your comment about Chinese investment in Latin America. Could you elaborate a little bit more there, and which are the countries that China is focusing the most in Latin America?
Yeah, the question relates to China and Latin America. Where's the greatest focus? I think that, I would put Mexico in a different bucket than South America. I mean, clearly Mexico historically has been, probably more of a competitor to China, but more recently we've started to see that dynamic change as well. So, today I think Mexico and China are probably, growing the relationship on both sides, albeit from a very, very small base. In Latin America, I mean, the biggest investments you've seen, I mean, as people know, China is the region's largest trade partner. And it's gone from, in Brazil, for example, 10 years ago, that was definitely the US was the largest trade partner, or possibly the EU, I should say, as a whole. And China was probably a tenth the size. And then in a period of 10 years, China overtook the US and Europe to be the largest trade partner. But most of that is clearly, raw commodities in a few specific categories. And so the capital investment has followed those, those categories for the most part. Oil, agribusiness, mining, in iron ore in particular, and a few other categories. I think the Chinese have invested in a Chilean wine business, if I'm not mistaken, which seems a very sensible thing to do. And beyond that, we've seen the Chinese invest in financial services. They've bought banks clearly in Argentina as well as Brazil. And I would say that it's the countries that are looking for financing outside of the traditional capital markets channels have increasingly focused on China. We've seen many examples of that over the last year, whether it's Argentina or Venezuela, for example, trade missions and looking, seeking additional investment from the Chinese. So yeah, I think as my perception in seeing some of the investment flows so far is that there's a desire to have access to and invest directly in commodities, but at the same time, the infrastructure that supports it, the logistics, ports, power, toll roads, and or roads, and all those things are sort of happening in to greater or lesser degrees. So yeah, but as I said, my key observation is I think it's very, very early stage. I've met a number of I think that the amount of there's been a certain number of trade missions and trips and so on, but relatively few. And because of distance and language and lots of reasons, I think that the relationship is still at a very, very early stage.
Thanks very much, Charles. I'm Len Panett from Visaggio. Back when The Economist printed that famous front cover of the rocket-propelled Corcovado, I attended a Brazilian government roadshow here in London where they were going around the world trying to raise capital for a wealth of infrastructure projects. The response to that roadshow was, in both capital terms and the projects that were launched, underwhelming to say the least. Jump forward 5 years to now, conditions are a lot worse than they were perhaps at the time. Pessimism and optimism rebalance, as you mentioned. What lessons should be learnt from that particular adventure to improve the situation in the future?
Yeah, if I'm not mistaken, I think Lula himself came for that specific trip and spoke at a large gathering, talking about the optimism. It was shortly after the World Cup, or relatively shortly after the Olympics and World Cup hosting had been announced. Yeah, I don't know the data in terms of relative what the take-up was then. I mean, if you look at foreign direct investment in total in 2010, in 2010, 11, 12, it was very high coming into Brazil. Perhaps not less so in infrastructure. I think specifically because the government has had to find the right levels of returns to attract private capital, where there's obviously infrastructure opportunities globally in lots of interesting developing economies, and that requires the right level of incentivization, returns, and it requires the availability of project finance, which can be challenging in Brazil. Also, the currency is challenging in Brazil for very long-term investors who think in dollars and find it difficult to hedge. So infrastructure in Brazil has always been, somewhat of an interesting or challenging category. But the lessons over the last 5 years, I think the government has done a good job of finding ways to accommodate and attract foreign capital. Those levels have increased. And what we often see, in fact, we're seeing it even now, is businesses that looked at something very closely 3 years ago and didn't get there say to themselves, well, thank God I didn't get there, but are interested in those same projects again now. So we'll see. We'll see. Timing is important.
Hi, Sebastian Ricketts from Foreign Office. I'm just very curious, in the short run, obviously, because in Brazil the growth is declining at rate. I think it should enter probably a recession next year. Do you envisage that financial market liberalisation will occur in order to boost growth, essentially? My understanding is that there's no formal alternative investment market in Brazil. On the Bovespa, for example, there was only one IPO last year, an agricultural company. And also SMEs as well, 60% of the jobs in Brazil, 30% of GDP, but funding primarily takes place from the development bank. What are your thoughts on liberalisation of financial markets?
Well, first of all, you're very well informed. Maybe I should have invited you to give some of the figures I gave. We did lead the one IPO last year, I should add, called a very interesting animal nutrition business. But your point is very valid. I mean, if by liberalization you mean capital markets, this is where you need greater conviction on the part of institutional investors. They tend to have somewhat shorter-term horizons, and it's very difficult in the current environment to have the required level of conviction for there to be an interesting IPO market. At the same time, leverage is not very high for for many companies in Brazil. Interest rates are high, but actual leverage rates are not very high. So companies are often able to be patient and wait for the right time to sell a piece of their company or open the capital if that's what they're going to do. I do think, I mean, you're already seeing public sources of financing pull back a little bit. That's consistent with the measures that the new finance minister has announced, which is part of just fiscal, readjustment in Brazil. There's been a sort of dual, financing market in Brazil for a long time, and I think that will somewhat diminish. But your point is valid, and that's, by the way, that's exactly why I make this feel very strongly that this is, the region does need to market itself and attract foreign investors. There are buyers out there. There are, companies, very good companies that need financing, and we need to find ways to connect those, to create that market, even in the very, challenging economic background we're seeing right now. I'm amazed by the number of new companies that continue to start in the region, and many. I'm sure we all. In fact, I think the next speaker is someone who's going to talk about entrepreneurship in Latin America. Notwithstanding all of the headwinds that we see right now, we do see tremendous number of new companies being formed, of people going into business, identifying market needs and finding ways to finance it. I don't know how much time we have here, but maybe one more, if anyone, yeah.
Hi, my name is Pedro, and I'm a student here in LBS. And I'd like to know what you think about the future, and what do you think the government should do in order to increase foreign investment.
Yeah, it's a good question. As you can tell from my comments, I mean, I'm somewhat optimistic. I am optimistic about the future in Latin America. I'm especially as a non-Latin. I've spent most of my career in focusing on Latin America because I have a conviction about the potential. And even over the last 25 years in the course of my career, I've seen such enormous development in many countries in Latin America that I continue to feel optimistic that in 20 years, even a 10-year horizon in Latin America, you can still see a lot of change as long as you have the right convergence of good policy and support from the private sector and sort of everyone rowing the boat in the same direction. When that happens, it's very exciting in Latin America, and I'm sure that will continue to be the case in the future. So I am optimistic. The question is, what can the governments do? I think I do think that not losing sight of marketing to foreign investors to talk about what's going on in the country. If I'm not mistaken, the president of Mexico will be here in the UK in the next few weeks, addressing probably several groups about what's going on in Mexico. I think that foreign investors who don't spend their time day in and day out really analyzing what's going on in detail in these countries, all they read about is a scandal or a headline, and they say, I can't invest, and they don't have enough information to really understand what's going on. So the more countries can and the key business leaders and government officials can inform beyond what might appear in the Financial Times or the press, what's going on in the countries, the better. I think the Chile Day, which is long established here in the UK, has been effective. Many other countries do something similar. That's something that we try to do as well as our role as one of the key banks in the region. But there's a real shortage somehow of understanding and communication. Great. Well, I think I'll leave it there. Thank you very much. Good luck with the rest of the forum.